This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices edged up on Monday, aided by hopes of rising fuel demand this summer despite being weighed down by a firmer dollar. As expectations of interest rate cuts were pushed out further following strong U.S. jobs data. Brent crude futures gained 28 cents, or 0.4%, to $79.90 a barrel by 0427 GMT, and U.S. West Texas Intermediate crude futures was up 0.3%, or 26 cents, at $75.79 a barrel. On Friday, data showed the U.S. added more jobs than expected last month, leading investors to trim expectations for rate cuts, which helped the dollar to rally.
China's imports of major commodities were either openly weak in May, such as the decline in crude oil, or those showing apparent signs of strength were deceptive and largely driven by factors other than rising consumption. Arrivals of crude dipped into negative territory for the first 5 months of the year, with calculations based on official customs data released on June 7 showing imports of 11.0 million barrels per day, BPD, in the January to May period, down 1.2% from 11.13 million barrels of oil per day in the same period last year. China, the world's largest crude importer, landed 11.06 million barrels of oil per day in May, which was slightly up from April's 10.88 million barrels of oil per day, but massively down from the 12.11 million barrels of oil per day in May 2023.
Moving on to the top news in the energy sector.
Diesel fuel prices in much of Malaysia are set to rise by roughly 50% on Monday as the government begins shifting away from costly blanket subsidies to a targeted approach that mainly helps the needy. Malaysia, which heavily subsidizes prices of fuel, cooking oil and rice among other basic items, has seen its subsidy bill rise to record levels in recent years amid surging commodity prices, straining government coffers. Its diesel subsidy bill alone has risen tenfold from 1.4 billion ringgit in 2019 to 14.3 billion ringgit in 2023. The government said last month its plan to cut diesel subsidies this year is expected to save about $853.24 million annually, with the savings expected to be redirected to low-income groups.
Iraq's oil minister Hayyan Abdul Ghani said there has been progress in talks with Kurdistan region officials and representatives of international companies operating there for a deal to resume oil exports via pipeline to the Turkish port of Ceyhan. "We have a progress in today's talks and we expect to reach an understanding in a few days," Abdul Ghani said in an interview with the state-owned Iraqi TV on Sunday. The Iraq-Turkey oil pipeline that once handled about 0.5% of global oil supplies has been stuck in limbo for more than a year after its closure, as legal and financial hurdles impede the resumption of flows from the region. Next, we have the top news in metal markets. China's iron ore imports in May stayed above 100 million metric tons for a third straight month, customs data showed on Friday, thanks to the anticipation of higher demand after a slew of stimulus measures by Beijing to revive the property sector. The world's largest iron ore consumer brought in 102.03 million metric tons of the key steelmaking ingredient last month. Data from the General Administration of Customs showed, in line with analysts' expectations of between 100 million and 105 million tons. That compared with 101.82 million tons imported in April and 96.17 million tons in May 2023.
China's imports of coal rose 11% in May from a year earlier, customs data and Reuters records showed on Friday, as lower domestic output this year led to increased shipments of international coal. Coal imports by the world's biggest consumer of the fuel were 43.82 million metric tons in May, the customs data showed. That compared with 39.58 million tons in May 2023, according to Reuters records. China's coal output in April fell to its lowest since October 2022. Safety inspections following more deadly mining accidents weighed on production this year in the top coking coal hub of Shanxi.
We will now look at the top news in the agricultural sector.
Chicago wheat lost more ground on Monday to trade near their lowest in 5 weeks as Turkey's move to ban imports triggered worries over demand for Black Sea cargoes. Corn inched higher after Friday's losses, while soybeans dipped. Turkey has ample domestic supplies, said one Singapore-based grains trader. Turkey's decision will have direct impact on exports from the Black Sea region. The most active wheat contract on the Chicago Board of Trade fell 0.4% to $6.24 minus 3/4 a bushel, as of 04:05 GMT, not far from Friday's lowest since May 6 at $6.18 a bushel.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.